Hey traders, it's been a while since we've checked in on cannabis and psychedelic sectors, so we're going to look at them here and the developments that have taken place over the last few weeks. As I've been saying, we're paying attention during this time of the year as the voting cycle has added some headline momentum for bulls, and we also have the broader market as the most important factor for me when we're trying to find a bottom. So we need to be paying attention to the broader market. I cover it every single day. Well, maybe not every single day, but I cover it daily on YouTube and our free YouTube channel. And so it's worth checking out. I cover the cannabis sector sometimes among all the other sectors. But as far as cannabis specific, we have CGC leading the way on the Canadian side and one of the best performers over the last couple of weeks. We know we had the headlines coming out about, Biden, and we're going to look to pardon people, blah, blah, blah. We had a quick spike up. We gave a lot of it back. And now the bulls are trying to make their way back to the high of that spike. And so the way to differentiate names right now, names that are breaking that high, names that are near that high, and names that are not near that high. And that's differentiating stronger versus weaker. That's one way to do it. Measure where we stand versus the high from October 6th. Another way to do it is using ratio charts, and I'll show you that in just a second. So other than that, as far as news, we don't have a red wave coming out of the election. We have people still hopeful that potentially we can get something from safe banking here in the near term. The holy grail in the short term for me personally would be rescheduling or descheduling or pausing Schedule 1 for cannabis, but it's still a very headline sensitive sector. In the absence of headlines, we still can see upside based on the broader market strength. So the broader market rallied Thursday and Friday because CPI numbers were lower than anticipated, which increases probability that the Fed is going to slow its raising of rates, and market bulls like that. So CGC is leading. CGC had company-specific news, of course, earnings, but then we had company-specific news about them potentially further getting their foot in the door in the U.S. markets through acreage. And that was a pivotal point, where CGC divided by TLRY, if we put that onto the chart to see who is stronger, if it's in an uptrend, because CGC is the numerator in this equation, that means CGC is stronger. So we can say that since October 24th, CGC has been stronger than TLRY, and if we can get over 110, that would get us to the strongest that CGC has been compared to TLRY in 4 to 5 months. So keeping an eye on that, because personally for me, when I'm focusing on the sector, I don't care about any of these names fundamentally. I care about the narrative, bigger picture fundamentally, and the government, aspect of things. But as far as each individual company, I just care who's stronger and who's weaker. And I don't need to look at a balance sheet to see that. I look at the charts. And so I just focus on one name, or two names, I should say. If I'm looking bullish, I'm focusing on generally speaking, I'm focusing on the stronger name. And if I'm looking bearish, I'm going to look for the weaker name because the probabilities will be more in my favor if I'm looking in the direction that the wind is blowing, so to speak. So the lead bull has wind at its back, and if I'm looking bullish, that's going to help me. And if I'm looking bearish, the lead bear has the wind in its face, and that's going to help me. And I do trade the sector in both directions, and I highly suggest that if you have long-term positions as a bull, that you learn about hedging, learn about protecting, and don't just be a one-trick pony by just buy and hold, and that's all you can do. There are ways that you can actively protect. So, CGC, notable end of the week. Why is it notable? Because we had a triple top of daily resistance that broke 385, 383, and 389. So we broke the high of the reaction from October 6th. That's a great sign for bulls because as we know, for trends to change on longer term timeframes, we have to see higher lows and higher highs. And so now it's all about 430, which is in play this coming week. And if we can get over 430, that is further shifting the momentum where that would now get us to the highest level in 5 months. And we could say that anybody that shorted CGC in the last 5 months is underwater. And again, that just helps us shift the longer term scales. It's been supply outweighing demand of shares for a very long time. And right now the scales, while we've been trading sideways the last couple of months, have been, here's supply outweighing demand. They've started to do this. And if these bulls can clear 430 and keep this momentum going, then it's going to flip to demand outweighing supply. So we're watching our daily uptrends. We're watching our hourly uptrends. And again, there's plenty of volatility in both directions. I was playing CGC both long and short on Friday. We had a really nice rising wedge here that ended up having me in a short at 420 and covering on the way down, covering the second half when bulls followed through. I was playing long on some of this move as well, but look at the volatility here where we see the morning move up, big move, 13%, and then within an hour, we drop 4 to 5%. So plenty of opportunity in both directions, but the bulls are proving momentum in their favor here, and we're keeping an eye out for a number of things. I'm watching the daily RSI, because when RSI gets overbought for the first time when changing trends, that can potentially mark a temporary top, but not something you need to worry about unless you're an active trader. And I know that people that watch these videos, we have a very wide spectrum of very passive investors versus very active day traders, and a lot of people in between. So, depends on which you are as to which info that I give is most pertaining to you. But hourly uptrend, plenty of space for the higher low to form. Anything above the low of Friday is going to be an hourly higher low next consolidation. So even if we start Monday with red, we will be looking for the hourly higher low. If we lose the hourly uptrend, then we zoom out and scout a daily higher low. And there's tons of space for it to form. And we'll be watching for things like first hourly oversold conditions. Do bulls aggressively buy that dip, which shows to me money on the sidelines continuing to come in and continued pressure on shorts. If we see first hourly oversold mark a daily higher low, that's a good sign for bulls in an uptrend. So nice momentum. CGC is my lead bull as long as it keeps outperforming. TLRY is a little bit weaker, but it too made a break of 419. What bulls on TLRY need to be cautious of is a rising wedge, which would be something like this. And this doesn't mean, I think that this pattern is likely. It just means I'm being aware of it. And it won't surprise me if it happens. So if we break 419 and don't see any follow through and start daily consolidation from here, for me, that would increase probabilities that this is a rising wedge. And a rising wedge pattern just shows us bull exhaustion. And I have a whole video on wedges. So if you Google ChartGuys wedges, that will let you know all about that pattern. But 419 double top did break, no follow through at this point. But after 425, the high of Friday, it's 452. So CGC's 430 level aligns with TLRY 452. So we can see CGC has 2% to go to break that resistance level to the highest price in 5 months, whereas TLRY needs about 6% or so. Cron, I'm keeping an eye on Cron as well. It's weaker. And again, you can just, if you want to see who's weaker, who's stronger, CGC divided by Cron. How is this shaping up? We can see CGC is outperforming Cron, and it is the strongest CGC has been compared to Cron in 5 months. But I like Cron's 2-day time frame for clarity because it's a tightening range, and I love equilibriums, which is just tightening ranges that eventually lead to a break and a spike in volume and volatility. So I'm scouting a lower high compared to 336 on this move. If I'm looking bearish in the sector, I am much rather looking at Cron, which has a resistance level in play and can still see another 10% of upside before we even get there. So, the sector can be green 5% on Monday, and I'm still going to be scouting that lower high compared to 336. And I am anticipating that the most likely scenario is something along these lines, tightening range. So if I'm long CGC and I want to hold that position for 3 months, 5 months, 12 years, whatever, I can be actively looking to say, all right, well, I'll enter bearish. Let's say if Cron heads up to 320, I'll enter bearish up there. I'll stop out if 340 breaks. And if I take that loss, okay. But I know that my long-term position will be benefiting as it continues to go up as well. So that's essentially a bit of an insurance play. And that is something that I actively do. But again, I'm a full-time trader, so much easier to keep a pulse on things on a day-to-day basis. And if it's not for you, then I wouldn't suggest doing it. So that's the only names that I care about on the Canadian side of things right now. You have to keep in mind that if this is the bottom, which again, we need more information, it's the most bottom it's looked in months, which is a good sign. But we are going to have opportunity, the smallest cap names, the high risk, high reward names, they're going to see the biggest percentage moves. So if you're in this sector and looking to be really aggressive, you are paying attention to the small cap names and looking to see who's leaders and who's laggards, or I should say who's stronger and who's weaker out of those small cap names. For me personally, these names give me all the volatility that I need. So they give me the volume, the liquidity, and the volatility. So I only care about these three. But that doesn't mean you shouldn't care about other ones. It all depends on what your goals are. You know, when the bottom is hit, this is what happens with all sectors. The smallest, highest risk, highest reward names see the biggest drops on the way down and the biggest gains on the way up because they are much more thinly traded and a little bit of volume goes a long way. So on the US side of things, US MSOS here. So look at the high. Look at the high of October 6th and 7th. We're not close. We are over 10%. We can go 13% from here before we get there. So we can say US cannabis is clearly lagging behind CGC and TLRY. And again, it's the people that get really frustrated fundamentally when that's happening, but it has everything to do with liquidity and trading opportunity and bulls willing to put their funds in the more liquid names and not the names on the OTC at this point. And again, CGC divided by MSOS can just give us a quick glimpse, Canada versus US, and we can say that CGC is currently the strongest that it has been in the last 5 months, 6 months, comparative to MSOS. So again, if I want to know who's the lead bull, CGC is passing all of the tests. So simple statement, if MSOS does not break through 1313, it's a big red flag for bulls. We need to break that, the sooner the better, but it's possible we tighten up for a while. Let's go to the 3-day time frame here. And again, it's just such a wide range that we traded within. Not only the size of the bull move, but then the size of that retracement, which was, we gave back 80% of that move. And so now we're clawing our way back up, but it's entirely possible we form a lower high compared to 1313, and we just tighten up for another, 3 weeks plus. Obviously, headlines of any kind from a fundamental perspective can shift things notably, but now that we've passed midterms, it's almost like, okay, well, are we going to be waiting for 2 years from now for the general election for Biden and the Democrats to try and fuel this fire a little bit? Hey, look, we're doing things on cannabis. Vote for us. So we might have a little bit of a blackout period in the sense that Democrats might want to save that ammo for when it matters, just like they did with this last one. I mean, obviously the timing was intentional to put that out in October, a month before midterms. That's intentional. So keeping that in mind as well, if I'm looking for any kind of federal progress, might have to wait 2 years. But potential tightening range. And again, we can go all the way back to here for this tightening range. It's a wonky equilibrium, but after significant volatility in both directions, we scout tightening ranges. So again, same thing. If I'm long MSOS here and we keep grinding up for another week or two, but get close to 1313, maybe I short at 1250 and look to benefit if we were to pull back from there. And again, if the bull break takes place, I stop out of my hedge and longer term positions continue to benefit. As far as the individual names, I'm not going to go in depth into them. Just going to point out very quickly stronger versus weaker. So Curaleaf heading up towards that high. We're 5% away. And then the high of 675 is key from there to try and get to the highest level that we've seen in 6 months. If we get over 675, we join CGC, who has broken that level. But obviously we still have work to do. But we're approaching that resistance. So 2 key levels to be watching. Curaleaf is one of the stronger names. It's closer to that resistance level. Trulieve is sideways. Nothing's going on in Trulieve for the last month at all. So patiently waiting, but we have to see a bull move here of what, 30%? 30% to get to that high. It's nowhere near it. Curaleaf is 5% away. Very big difference. GTBIF is approaching 1455, still a bit of a ways away, but more like 5-6% or so. One of the stronger names. If we clear 1455, it's 5-month highs. CRLBF, sideways. 381 resistance, closer than Trulieve, but it is still range bound and sideways. So just a quick glance at those top 4. Curaleaf, GTBIF performing the best in the last couple of weeks. Trulieve has the most work to do to recover, and Cresco sideways. Looks like Cresco still has earnings. We've made it through earnings for all the other major names. VRNOF, same deal. 618 is a ways away. And if we can't break 618, we're just going to look for a long, drawn-out, tightening range here. Earnings yet to go. But a lot of work to do. If we're going to get to 5-month highs here, we got to break a lot of levels. This is a weaker chart coming from all-time lows, and bulls have a lot more work to do. So on to psychedelic names. Where do we stand? We had Colorado legalize. I actually have to read exactly what the bill was here, but Colorado legalizing or at least decriminalizing psychedelics. I believe they've got, a new industry born in terms of tourism where they can have retreats and you can fly in and visit one of these retreats for some psilocybin. We'll see, but definitely a positive for the election, or the votes, I should say. But this sector is underperforming at the moment. CMPS tested the low of 886. Good sign that it held. It's a double bottom. Bulls need to break 1146, but we're not even at the high of the last 2 weeks. CGC is at the high of 5 months. What do we need to see to be at the high of 5 months? We need over 100%. So very different setup. At this point, I am scouting a monthly high or low on CMPS. This is a low, top of the bounce. Monthly high or low is shaping up here. So an aggressive bull is playing off of 886 and saying that's either the monthly high or low or I am wrong, and using that as a stop loss. And if that holds, it's a monthly high or low, and we then look back up towards 2150, which is a long ways away, which means it's entirely possible that this monthly range tightens up for another couple of months into the start of 2023. So trying to play catch up, but you can see that this name had zero bull interest until the CPI reaction Thursday and Friday. So trying to play a little bit of laggard catch up, but again, a lot more work to do. 1146 and 1191 key resistances. ATAI is weak. It's near its lows. So again, nothing really productive out of this name over the last couple months when cannabis has been establishing supports, shifting momentum slowly. We're not seeing that in this sector. And MNMD, for me, it's just a pump and dump at this point. Yes, it will have significant volatility in both directions, but for a long-term chart to do this and go back to all-time lows and then be associated with Reddit people and to have it pump and dump from that Reddit news headline stuff, for me, I just don't care about this name at all anymore personally. And the fact that we dropped 87% in like 2 months, some of these names have dropped 87% in like 16 months. This is 2 months. So just massive downside. And again, when momentum shifts, there will be opportunity. I mean, in 2 days, we bounced. This is what I'm talking about with the lower cap names, just having a lot more volatility in both directions. If we don't break 312, it's just a daily lower high. We've been in a daily downtrend since this Reddit-fueled pump. So again, I just don't care about this name. Doesn't mean there's not an opportunity to trade it, but it is the weakest name. We hit all-time lows 2 days ago. So that's weak. So that's where we stand overall. CGC lead bull. Cron weaker of some of the Canadian names. USMJ is weaker than Canadian cannabis at this point. Some names approaching the high of October 6th and 7th. Key resistance levels. Other names range bound and not close at all. And psychedelic names weaker. Appreciate you watching. Feel free to ask any questions. Make sure to stay along following with the broader market because for me, that is the most important factor.